Welcome to the Shortfall Show. My name's Dave. I was just watching this Sopranos podcast. It's pretty cool. I've been watching. They do it episode by episode. It's two guys from the Sopranos. The guy that plays Bobby Bacala and what's the other guy's name? The guy that plays Tony's nephew that gets killed. Anyways. I've been watching the show. They do commentary. They'll have a guest that they'll interview, and then they'll do commentary on go through the show, whatever episode they're profiling, sort of minute by minute, and talk about the framing and all this kind of stuff. I think it's cool because I'm a student of acting and. I haven't had much of an acting career, but it's something that kind of interests me. One thing that was interesting they were talking about is I was watching an interview that they had with Vinny Pastore, who plays Sal on the show. He has a nickname, but I don't want to say it because I don't want to get my YouTube video down, whatever. Yeah, they had Vinny Pastore on, and he was talking about how to be an actor, you have to really kind of dedicate everything to it, and you can't really have another job that's important. And it brings me back to a couple weeks ago when I got this extra role, and I was booked for the role with the casting agency, and then I couldn't get out of a work shift, and so I had to cancel. And when I thought about it more, I could have found a way to go and do that role, and I guess I'm just not committed enough to be an actual actor at this point in life. Anyway, wanted to come on and talk about the VIX and the market. It seems over the weekend like there's been talk that the stimulus thing will go through. Last time I talked with you, I think we were at the point where we were saying, all right, they're going to extend the funding of the government for another week and try to get this thing done. I was watching the Young Turks or one of those progressive shows, and they were already acting like this deal was done and that the Democrats gave away too much, and they were just talking about strategy going into this I think actually it was like the Sam Cedar show, the Majority Report I was watching, where they were saying the Democrats weren't getting that much, and just if all the stimulus thing really does for the normal public is people that are on unemployment still get their unemployment, and people don't really get checks, then it's not really going to do very much. It doesn't really affect people all that much, and all of this, the negotiations that stalled so many times. We thought we were going to get this back in August and in July even, and all this stuff they've supposedly fought. Whichever side you're on, they've supposedly fought for so much time to get this good deal. And it seems like it's just going to be not that much of a stimulus. But regardless, we're thinking that the stimulus is going to happen this week. The markets are up coming into today, which is a good thing for the VIX position. I want to talk about the position for a second. And kind of sort of rare thing for me, I don't think I did any trades last week. I just let the position ride, and it's not been it's been kind of a boring thing, I guess you'd have to say. The P&Ls, I guess I'm down what is it, $900 on the position maybe. Let's pull up the screen and take a look here. So if we go to VXX, my position is I'm long these puts that expire almost a year out, right? So let me get out of the way here. And VXX has basically gone nowhere since I put this position on. It was up a little, it was down a little, but it was right around here that I put the position on. We're at 1742 right now. It might have been somewhere between 17 and 18 when I put it on. I can't quite remember. It might have been 1750. But if we do look at the position here, you can see it's showing me P&L down $900 on this position. So, and that is basically from decay. If we pull up our Analyze tab here, we can see it's showing this position costing $29 a day, which isn't that much. The low VXX went out on Friday at 18. Now we're down 60 cents. The VIX down 75 cents. We've been kind of in a range. Let's look at the VIX real quick here. we've bounced around. We had a little spiky spike, and it seems like we're coming off it again, but it's just a kind of a short-term spike type thing. This is the 10-day chart. So this is basically, I probably put this position on around 10 days ago, and you can see the VIX has gone kind of up to sideways since then. The way I think about this position is, when we go back to the Analyze tab and we look at the decay, we were saying this has $29 a day in decay. Let me move myself over so you can see me, and there I'm kind of floating in midair there. You can see below me here the decay, $30 a day. The way I think of it is we are decaying, because of contango, we're decaying a certain amount per day. So let's do back of the envelope math on that really quick. For those of you who are maybe new at the VIX, I apologize to just jump right in here, but hopefully you'll still get something out of it. All right, so behind me on the screen, every place I move, I'm blocking something. So let me move back down again. So over here on the left side of the screen, you can see the VIX futures. The front month is down $1. We have expiration this week. So the front month future is almost moot right now. The products that we're trading are based almost entirely on the second month future, that being the January future. The symbol is /VXF21. And that one's down 82 cents. The front month future is down $1. Once again, we're coming into expiration in 2 days, and so it's kind of moot, pretty much, that future. However, let's pull up our VIX Central to look at the term structure, because even though that's true, the contango is still affecting us as much as it always does as we slowly roll the last futures out sideways. And I see a question here, just what's up, Warren the Idiot Math says, do you use dynamic hedge or static hedge when you were a market maker? I'm not exactly sure what you mean by that. If we kind of divided it up into two, just as a little tangent, but that's fine. We kind of divided positions up into two types of positions, back spreads as we called it, or front spreads. A back spread would be if you net are an owner of options. So for example, you've got, let's say you've got a stock, let's say you've got Apple and the stock's trading 100 and I own a bunch of the 100 level calls, right? So as the price of the stock moves higher, I have some shares to sell up above. If the stock moves lower, I have some shares to buy down below. So, so just to go through what would happen for a typical trade, you know, you'd stand there in the pit all day, or if it's online, and a bunch of trades would come in. Maybe someone would sell you some calls, someone might buy some puts, vice versa. And what you would do is, as you did a trade, you would hedge them with the underlying stock as stuff happened. So for example, I do a trade, it gets me long 6,000 deltas, so I'm going to turn around and sell 6,000 shares. Another trade gets me short 2,000 deltas, so I'm going to go ahead and buy back 2,000 shares. So essentially we would, you know, unless there was some real reason for it, we would stay flat, delta neutral, and we would hedge whatever options position we had on with the underlying instrument, which was generally a stock, since I was trading equities most of the time. And we would tweak our position. So for example, if we were buying a bunch of calls that were way out of the money, we might actually discount the delta on those. So for example, maybe we were buying stocks 100, we were buying some of the 130 calls a couple months out. If I buy 100 of the 130 calls, the sheet might say, well, those are 15 delta calls, but I know that if Apple continues to move up slowly, then I'm going to get killed if I sell a bunch of stock against those calls. So I might actually go in and tweak it in the system so that it's only assigning those calls a 10 delta instead of a 15, and hedge like that. So I guess from what you're saying, we might say that's dynamic hedging, as we're in real time, we're kind of adjusting as stuff moves around. But as a market maker, you've got trades coming in all the time, and it kind of depends on how liquid a stock is. You might have one stock that's very popular, and you're doing 50 trades a day back and forth with it, and you're having to adjust just to hedge all those trades. Another stock, maybe you're not doing a trade every day, and you've got kind of a long-term position that you're trying to manage. Most of the time as a market maker, you don't get to pick what position you have on. You just have to kind of manage the best you can with what you end up with. And yeah, you can signal, you know, if you don't want to be short these calls, you can, you know, start bidding them up a little bit, but it doesn't necessarily mean someone's going to come in and sell them to you. So yes, I would make markets, I would price things based on the position I wanted to have or what I needed to get done, but it's you know, it's a game. As a market maker, you can make some money by, you know, someone pays the offer and you get the stock at the midpoint. There's a little edge locked in there. You know, if you sell some call, you know, there's a wide market. You sell some call on the offer, and on the other side, someone comes in and sells you a call in another month on the bid. Then you're locking a little edge each time there. I hope that helps a little bit. All right, so back to the VIX here for a second. So so where were we? So we're coming into expiration, and we're in contango, and like I said, we're almost completely made up of the second month future in UVXY, VXX, etc. We can see that we're at 9% contango on the screen here. Let me get out of the way once again. And as it isn't always the case, the second and third month are lining up in contango nicely already. Recently we've seen a lot of times where like everything was totally flat and expiration came and it took a while for the next months to kind of arrange into contango. But we've already got some ground covered between Jan and February in contango here. And I'm going to quickly go to the ProShares website to show you for UVXY, just to prove to you that we're mostly made up of the second month futures right now. So if we look at daily holdings for UVXY, and I'm on the ProShares website right now, you can see Jan futures, 73,000 of them. These futures, only 8,000. So we're mostly made up of the Jan futures. And each day that gets less and less until expiration, when we're all the Jan future and December falls off. Each time, it's moving the average price up, right? So this 9% is per month kind of decay. It's going to act as decay. So if we do quick math once again, to get back to the point I was making. The point I was making before, just to refresh your memory, was if we look at our Analyze tab for this position, it's costing us $30 a day in theta. The way I look at that is the fact that we are decaying is going to cover that theta. So if we do the math really quick here, so we've got now it says 9.2%. Let's use 9%. So if we take 9%, 0.09, multiply it by the price of VXX right now, which is 17.5, we get 1.57. So effectively, this is decaying by 1.57 points per month, right? So if we take 1.57 and divide that by 30 days, we get 5 cents. So we're decaying by 5 cents per day, right? So if we go back and we look at, once again, to our trusty Analyze tab here. So if we go down by 5 cents, this delta shows 800 delta. So that means that we go down a point, we make 800 bucks. So if we went down 10 cents, we would make 80 bucks, right? If we go down 5 cents, we would make 40 bucks. So based on our math here, this decay is going to make us 40 bucks per day, and that's going to cover our theta. So anything else that we make or lose is just going to be based on what the VIX does and whether the VIX moves actually lower or not. Now, I haven't really been all that comfortable with this theta number. Like, I want to get rid of this because we've been moving sideways and it's just going to burn up my potential profit. So there's some ways I was thinking of getting rid of this theta number. One of them is to adjust the position. Now right now I'm long 63 of the September puts. Put price right now is somewhere, I paid about $1.29 for them. Right now the market is one bid at 132. My idea was maybe to sell half of these puts and then use some sort of calendar spread with the rest of the money, and that way I would get rid of my decay. So let's just model some ideas here. So first what I'm going to do is I'm going to model getting rid of half these puts. So I'm queuing up an order to sell that put, and then I'm going to right click on it and go to Analyze Trade. So then we're going to bring up our Analyze Trade screen here. I'm going to raise it up. We'll get rid of these other possible trades. Alright, so here now I'm going to sell half these puts. So it's 63, so let's just say 31. So if I sold 31 of these puts, okay, so everything's cut in half. That's fairly straightforward. So how much cash would this give us to work with? Well, alright, well, if I sold them at $1, it would give us $3 grand. We'd probably sell them for a higher price, but let's just go with that $3 grand. So I could take that $3 grand and put some trade on where I would actually collect some sort of theta, and I was thinking about maybe a calendar spread. So let's look here at a calendar spread that might be appropriate. So I'm going to go in and maybe I'm going to do something like the buy the June 15 put and sell the something closer to expiration. Let's see, where is Jan 15 put? Sell the Jan 15 put. Okay, so $245 for each one of these. So if I did 10, I could do maybe like 12 for $3,000, right? So let's try 12. So 12 would cost $2,900. Okay, so let's model this trade. All right, so I'm going to right click, Analyze Trade. So if I adjusted my position by selling half my puts out and putting this calendar spread on, how would that affect my Greeks? All right, so I'd be short less deltas, right? Instead of being short 800, I'm only short 500. However, my decay has gone down to only $6 or $7 a day from $30 a day. So is that worth doing? Well, it kind of depends. For one thing, this would cost me some commissions to do all these trades, right? Selling 31 puts, I'm paying 65 cents commission. So that's going to cost me, some money. If I sold 100 puts, it would be $65. If I sell 30 puts, it's like $20. So $20 commission for that, plus, this is another almost 30. So it's $50 commission to do all this stuff, right? And I know that doesn't sound like a lot, but I've been adjusting this position a lot, and $50 is going to cancel out any savings on this theta. It's going to cancel out 3 days savings on this theta. So is it really worth it? If this was making me positive by collecting $50 a day, then I think it was worth it. But right now, it just seems like I'm churning the position to do this. So I don't like this trade. It kind of comes down to the fact that the lower these prices get, the less there is you can do. So I'm just going to leave this for now. And the plan is not to leave it where I'm paying all this decay every day. Another idea is to just sell something against these puts, and that's kind of more my plan, is to kind of hang out and we get another kind of move down. If we got to move down to like 15 or something, then go ahead and sell something against these puts. Now, what candidates do I have to sell? Well, you have to kind of move out kind of far to sell something at the 10 strike. Look, if we move out 95 days, these puts are only 10-cent bid. So I don't really want to sell anything for 10 cents. That's just not worth it to me. I could sell something higher. I could sell a couple of these puts out and just sell some front month, put verticals or something. I could go out to like December 17th and maybe sell the, the 16-14 put spread a couple times, or 16-15 put spread a couple times. If I sold this spread, so sell that. But it's it's kind of small change, all this stuff. So each one of these is going to cost me 75 in buying power because there's a buck between these. It's a buck of risk. I'm already collecting 24 cents, so it's going to cost me 76 bucks in buying power. So if I did this 17 times, it would be 1,300 in buying power. How would that affect my decay? It would cut my decay in half, right? So if I did this 35 times, then I'd be collecting $4 a day. So this, is the question is this a better position? I'm still short. I'm short half the deltas, or a little less than half the deltas, but I'm actually collecting money every day. So if we just move sideways, it's not hurting me. Right now, it's hurting me. So the question is, would you rather be shorter and have the opportunity to make a lot more money if it actually when and if it actually moves lower, or would you rather have a position that has less risk on? So it's kind of like more versus less risk here, and I'd have to leave that up to you. For me right now, I'm just going to leave the position as it is. I hope this kind of analysis stuff is does something for you. Do you know much about compound options? How do you trade OTC exotic options? Well, I mean, whatever kind of risk you want to take, somebody out there will take the other side of it. What exactly? I don't know. What specifically are you trying to? What kind of risk are you trying to take, Dylan? A call on a call? Which product are you looking at? A call on a call on? It seems like, to me, it seems like there's so many products out there already that are tradable that you should be able to find something out there in the world that's already listed to trade with that you can make money from. Certainly, any kind of risk that you want to take, somebody will make a market for you. We had something, I'm probably dating myself a little bit, we had something at the SIBO. Oh, hold on one second. It's saying I put an order in. We had something at the SIBO called Flex Options, and what that was somebody has an idea for something they want to trade, and we will make that option for you. We can make up anything you want, and we'll do it. Make a market for you. So tell me exactly what your idea is, Dylan, and I'll make a market for you. Obviously, I can't trade with you directly, but I will make you a market in the product, and maybe we can talk about some product that's already listed that will that can do something similar for you, because I don't think you need to look beyond what's already listed to find trading opportunities out there. The problem with creating something exotic like that is that there's not a lot of liquidity in it. So probably if you make a trade with somebody that's exotic like that, you're going to have to go back to that person when you want to get out of it, and they're probably going to try to rip you off when you get out of it because that's what people do, right? So by coming up with a custom idea, it's going to cost you edge because they're going to make it. It's going to be in a liquid market. So yeah, like Tom said, liquidity would be an issue. When trading the VIX, is it beneficial to be net long deltas because when there is a spike to the upside, there will be an increase in IV? Yes, Tasty Trade likes to be short deltas on the SPY. The problem with being long deltas in VIX products is that they all decay. So you've got that working against you all the time. Certainly, you're correct when you say if there's a spike, there will be an increase in implied volatility. That's certainly the case. The issue is just on the other side. You kind of have to time it well. You have to time it specifically when there's going to be a spike, because most of the time there isn't a spike. It's kind of like a market crash. Most of the time the market isn't crashing. It's moving higher. Most of the time VIX products aren't spiking. They're inching lower. And so to be kind of, how they talk about trading, you don't want to be a gambler, you want to be the house. When we think about what does that mean when applied to the VIX, to me it means all these people are coming in there with a long shot. I'm gonna buy some of these products, and I'm gonna time a spike, and I'm gonna get that spike, and I'm gonna time it exactly, and I'm gonna make a ton of money. I think of that as being like the guy going into a casino and putting money on a specific number in blackjack, or not blackjack, in roulette, and trying to hit it, as opposed to me being the house and saying, yeah, it might spike, but the odds are it's not going to spike today, and staying short these products. So certainly I know traders who make money being long VIX products, and they're good at timing stuff. Maybe they develop their own sort of indicators. They're able to kind of discern when the market really doesn't look good and to jump in there at that moment and ride these products up. For me, I'm not very good at market timing at all. I prefer to do the odds on thing, which is to be short them, because most of the time this stuff is slowly moving lower. But people make money both ways. That's probably kind of like the best answer I can give to you for that particular one. Anyways, so there you have it. Monday morning, look for the stimulus thing to happen this week. If it doesn't happen, it's bad. If it, I mean, this is kind of obvious, but if it doesn't happen, it's bad for the markets. But we're thinking that something is going to happen this week. If it doesn't happen this week, it's not the end of the world. It's going to happen, once Biden's in office or whatever. It just seems so strange to me that the president is still doesn't acknowledge at all that they lost that Supreme Court thing, and is saying we won by a landslide. And I don't understand this strategy here. Anyways, that doesn't matter. I said something political on Twitter, and I pulled up my Twitter thing, and there was all these millions of comments and stuff like that, and it's no fun doing politics on Twitter, because it's just these people doing talking points. Either they're Republican or Democratic talking points, and I put up a tweet that was it was not siding with either side. It was saying, well, the Republicans are wrong because of this, and the Democrats are wrong because of this. And so I had people from both sides mad at me and putting talking points for the Democrats and Republicans, and just obvious talking points that anybody could have thought up, and gotcha, yeah, gotcha, Dave. And it's just so lame. I want someone's interesting ideas. IV spoke can boost long options, but timing. Yeah, timing's the thing. It all makes sense in the end if you think about it, because yes, this stuff's decaying over time. So if you want to place that bet, this stuff's going to move higher, it's going to cost you, right? You could be right and make a lot of money, but it's going to cost you. The only way someone's actually going to sell you that bet is because they're getting a decent price for it. And so it kind of all lines up in the end. If there was some way to buy the VIX and it wouldn't cost you anything, then everybody would just buy it and hang out and just wait for there to be a spike, because there's going to be a spike at some point, right? So if it was just a thing where you could just buy the VIX and just hang out and it didn't cost you anything, of course you'd do that, because stuff's going to go down at some point. Something's going to happen negative. So you just buy it and wait until a spike happens and then sell it back out. Unfortunately, it's not that easy. All right, best of luck. I'll see you on Wednesday. No Twitter account. Good for you. I have to have some of these things just because I'm a YouTuber and I'm trying to market myself. But it's interesting. I will say that there are a bunch of traders on Twitter that that's their only platform, and there's some interesting guys on there that say interesting stuff. So I can plug it that way. I started out with the Twitter thing doing those things where they say follow me, if you follow my account you'll get 1,000 followers, and follow me back. But then my whole stream was just people saying to follow me that had no other content. Why do you want to follow someone that has zero content other than saying please follow me? I don't want to look at that. So I got rid of all those people, and I just put people that interest me. Usually if someone follows me, I follow them back. I think that's a cool thing to do. I don't like people on Twitter who have no followers. It's oh, I'm really important, and you know, I teach people stuff, but I don't need to learn anything. I already know everything, so I'm not going to have followers. People can just follow me. I generally don't follow people that don't follow other people, and I don't expect people to follow me back necessarily, but if you've got 0 followers, it's kind of lame, I think. I'm sorry, if you're not following anyone else, it's kind of lame because, come on, we're working together here. You know what I mean? And I've always seen marketing for YouTube, for me, with other YouTubers and whatnot, as a collaborative effort. We lift each other up, and that's true in life, whether you're a YouTuber or not. And so, you know, if you follow me on Twitter, I'll most likely follow you back. If I don't, nudge me, and I certainly will, because, you know, we're all in this together. And so when I see people that have, like, they're only following 2 people, it's like, whatever, man. All right, have a great week. Keep smiling, everybody, and thanks for watching. You know, I forgot to turn on the commercials on the last video. It's been kind of slow as far as like Patreon and memberships and stuff like that. So if you get a lot out of this and you're not a member in some way or don't sign on to Patreon, I don't expect people to do both, but I don't expect people to do anything. But if you know, if you get something out of this and you want to help out, that would be great. I appreciate people being members and people helping out just to cover the costs of just turning the lights on in here and stuff, and support the channel, support what I do. That's awesome. I appreciate it. I want this to grow bigger, of course. You know, I want to be able to talk to more people. So like and subscribe, all that great stuff. Thank you for supporting me, and I'll see you next time on the Short Vol Show Live, which will be Wednesday morning. And I'm going to put my favorite thing, which I know some people don't like this, but it's like my favorite song, so I'm just going to put it on the way out, and I'll see you next time. Thanks for watching. Ooh, it's loud. Sorry.